On Tesla, of course, as we do look ahead for what this year has in store for the company. Let's bring in George Gianarikas. He's managing director at Canaccord Genuity. Got a buy rating, $275 price target on the stock. Nice to have you. You wrote in a very recent note that you thought, at least in your opinion, that these numbers that we got on production and delivery were better than at least the worst case fears. Market doesn't seem to be taking it that way, George, does it?
No, I think everyone's now waiting for the conference call. Elon Musk gave a chat on Twitter Spaces a couple of weeks ago and basically alluded to the fact that the company is going to value unit over margins as we head into the cyclical downturn in autos. And so I think we're all waiting to see how bad the margins and the average selling prices could get next year. Well, we have confidence over the long term is that every time, and why we think the company prefers unit over margins, if you think about it, every time they sell a car, there's a $15,000 opportunity to add software to that vehicle. That's 30% gross margin in addition. And that $15,000 is autopilot. Right now, we assume they're at about a mid-teens penetration rate. But as that product gets better, as people feel more comfortable with it, we think there's a long-term opportunity to really enhance gross margins.
So that's one of the key reasons why you still have a $275 price target on the stock?
Yeah, well, that reason. And if you look at this company relative to others, I'm sort of a meat and potatoes kind of guy. This is about earnings and earnings growth. Even if you assume it's 20 or 30% earnings growth, we assume it's a little bit higher than that. We get to about $11 in non-GAAP earnings by 2025. And if you compare this to the other big cap tech companies, which we think Tesla should be comped to, it's incredibly attractive. I mean, this is trading at close to 10, 11 times earnings on 2025. That group, which includes Apple and Amazon and NVIDIA and Meta, they trade about 17 times. So you're getting much better growth for a much better valuation. And we think that screams relative to those companies.
Wait, those companies trade on 17 times 2025 or today?
Yeah, it's 2020. If you look at them as a group right now, if you look at NVIDIA, Apple, Microsoft, they trade about 17 times 2025, yeah. Correct?
Okay, yeah. Now, I guess the question is, you're saying this is a cyclical, not secular issue in terms of this small shortfall on their growth estimates for this year. Doesn't that have to get into the valuation as well? The fact that this is basically subject to some of the same cyclical forces. Some are going to argue that the model lineup has not really been refreshed very recently, and exactly how is it going to compete, you know, in a global auto market where everybody is trying to, you know, do a lot in EVs.
Yeah, and I think I think people are trying to figure out how cyclical this is, what the secular growth is going to look like even into a downturn. And look, the stocks came off like 70% last year. It's down another 10% or 9% today. So clearly a lot of this, in our opinion, is priced in. And with regards to new models, they announced two things. One thing actually that was interesting, they announced an Analyst Day, and they're also going to introduce their Gen 3 platform, which is this low-cost model that people are talking about. Maybe it ramps in 24 into 25. And don't forget, in the second half of this year, they're bringing on the Cybertruck, which is a game changer. And look, some of the orders that they have may or not stay, but people had assumed there's about 1.5 million orders for the Cybertruck last time we saw some published numbers.